Hi everyone, welcome to this special episode by Infinity Learning Space where we bring you insights from the boardroom to the exam room. So, as a part of the ongoing masterclass series that will help you decode the SL5 case study, we have a very special here with us who operates at the pinnacle of the Sri Lankan logistics sector. Joining us today is Mr. Virendra Pereira to share his wealth of knowledge and expertise with us. So we hope that will help you, our students, to bridge the gap between the real world business leadership and the case study learnings.
Thanks for having me.
Yes. So, Mr. Virendra Pereira, thanks a lot for joining with us here today. So, Mr. Pereira is a charter holder of the CFA Institute, USA, an associate member of the Chartered Institute of Management Accountants, a chartered member of the Chartered Institute of Logistics and Transport, and an attorney at law of the Supreme Court of Sri Lanka. He holds an LLB degree from the Faculty of Law, University of Colombo. With over 25 years of experience in strategic planning, operations, and analytics, Mr. Pereira has had several senior positions, both locally and internationally, in reputed organizations, where he served as the treasurer and director of SLASCOM from 2014 to 2015 and was a member of the advisory board of the BPM Forum by SLASCOM in 2021-2022. He also served as a director of the Institute of CF Sri Lanka from 2007 to 2010. Mr. Virendra Pereira joined Haley's Advantage Group in 2017 as Chief Strategy Officer and is a member of the Group Management Committee. In February 2023, he was appointed as the country head executive director of Advantage Singapore. He was also appointed to the board of Haley's Advantage Limited in November 2023, simultaneously assuming the role of Group Finance Director. Once again, a very warm welcome, Mr. Pereira, to Infinity Learning Space.
Thanks for having me again.
Okay, so with Hayworth Logistic PLC being the center of the case study for this year, we hope that this conversation will bring insights to our students to help them in the exam, and we hope your experience and your knowledge will help them bridge that gap between the academic analysis and what is actually happening behind the Sri Lankan logistic industry.
Hope I can help.
Yes, thank you. So to start off with a bigger picture, let me just take control of the screen. So seen here is what the case study brings to us as a part of the pre-scene in terms of the business and as well as the competitive landscape. So I would just like to, if you could elaborate how this is reflected in the actual landscape of the Sri Lankan logistic industry in terms of the competitiveness, the risks and opportunities.
Okay. Yes. So I can relate it from an advantage point of view, because we are also, in all these clusters that we are talking about, in international freight management, and then we call integrated logistics, projects and engineering, marine and energy, as well as aviation. So we have 5 clusters. Here they have, I think, 4. So we are predominantly on all these clusters. So from an overall landscape point of view, if you see, Sri Lanka is is in a great location in sea routes point of view, and hence why we are it's one of the top ports in the world. Colombo port being one of the top ports in the world. And on top of it, there is a lot of capacity enhancement. I think even this case talks about a lot of capacity enhancement with the East Container Terminal, West Container Terminal. They're talking about North Port, and so on and so forth. And, a lot of technology research has gone on to talk about port community systems, single windows, and so on and so forth. So a lot of positives for the Sri Lankan shipping and freight forwarding industry. and if you see, it is one of the top ports because of its transshipment, because we are predominantly a transshipment port, hence why it's up there. That's more or less from the shipping and freight forwarding point of view, because of transshipment. But if you look at the other sectors, integrated logistics, if you see, which talks about freight forwarding as well as in warehousing, third-party logistics and warehousing, that is more related. If you take freight forwarding, it's import and export, right? So that totally depends on that. Third-party logistics, it depends on which industry you serve. Like Sri Lanka has apparel, it has tea, FMCG. If you're into cold storage, that the market totally depends on those aspects. Last mile delivery, express, like we represent FedEx in Sri Lanka, so express is a huge area, inbound and outbound express. So that's integrated logistics. If you look at project logistics, that again depends on huge construction projects happening in Sri Lanka, which there were a lot, so there is a whole aspect of those trying to take off. Marine, again, it depends on, now we are one of the largest vessel owners in Sri Lanka. Again, it depends on which niche we are in. We have container vessels, bulk carriers, harbor tugs. We are also into bunkering, which is basically pumping fuel into vessels. Aviation, again, we are GSA holders for a lot of airlines. Inbound and outbound travel, again it depends on whether you're into passenger or cargo and so on. So overall, it's a very diverse logistics landscape that this whole case talks about. So each cluster has its unique, competitiveness, which we are one of the most diversified. If you take the rest, Expo is predominantly international freight management. John Keys also has, similar to us, a bit of marine, plus they have port operations. So I don't think anyone competes at the total spectrum. That's competing at different segments and clusters.
Yeah. Okay. So in our case study, the company in focus is Hayworth, but looking at their competitive landscape and how they share the market share, they're not leading. They're sort of at the third, I would say, when it comes to competition. For a company at that level, can you elaborate a bit about what type of risks, but at the same time opportunities they might face in the logistic industry?
Yeah, so again, of course, from a SWOT point of view, initially you need to start looking at your strengths and weaknesses first, to see what areas they can, enhance and, capitalize on. But then from opportunities and risks point of view also, they'll need to see opportunities. Like I said, Sri Lanka is a logistics hub. So then they need to choose which cluster, which niche that they can compete in, grow in, or once you grow, then you can diversify in that logistics space as well. But there is enough opportunities out there for them. I mean, there are a lot of freight forwarding companies, small players that are doing pretty well. Third-party logistics and warehouses also that are doing well. A lot of last-mile companies. So, there's enough opportunity in if they really focus on that niche and grow.
Understood. Thanks, Mr. Virendra. Moving on to the next aspect of the case study, we see that there have been some internal failures, operational issues within the business. For instance, this case, which was identified through an internal audit report about a warehouse discrepancy. And this has actually resulted in some customer complaints, supplier relationship issues. Apart from that, there has also been a vessel detainment case due to a non-compliance to one of the environmental related regulations. Another such incident that was brought to us was this delay in executing the government project. So we see a couple of these internal failures occurring throughout a few years in the case study. From your point of view, will you be able to just elaborate on, with your experience, how they could have better managed such issues, and what sort of the governing body, the governing mechanism, what sort of improvements they can bring in to tackle such operational issues happening or occurring in the future?
Yeah, so I mean, overall governance, you'll have at different tiers, right? At board level itself, there are the governance starts now at Advantage. You see, at Daly's level itself, there are board meetings to AGMs to so on and so forth. So every quarter we'll have a review meeting and so on and so forth. So on top of it, you'll have the usual forums like audit committees to remuneration committees to related party transactions are scrutinized, so on and so forth. There are a lot of layers at that level, right? So on top of it, at every like we would have a long range plan, then a mid tier plan, as well as then annual corporate plan. So all of these are trickled down. We have 59 companies, 5 clusters, 8 countries. So governance is what drives it, and centrally you have to manage it. So we have for performance, we have something. It's kind of a balanced scorecard, but it's more balanced stakeholder scorecard. So from the employee side, customer side, internal processors to technology to shareholders. So all of these areas, we have key result areas that we then measure. So if you look at that more from I don't know how an internal audit report actually leaked out, that's another governance issue in the case itself. Because I mean, we are a private company, but I know Hayward says they are listed, so maybe because of being a listed company, some of these aspects are reported out. So there are processors and technology and all are there to make sure none of these happen. So key result like KPIs, service levels are monitored. Like if you look at integrated logistics, we'll have control towers to make sure service levels are maintained. Because there are multiple, even in 3PL, you'll have distribution, transportation, value-added services, right? So a customer might be touching multiple companies, and within a company also multiple, business units. So then whether you're meeting your end service level, you'll need to track. So like things like control towers are there to make sure you achieve those. But being that you depend on technology and people, and invariably there is no way where human beings are involved you can get 100% service level, right? So there'll be percentages that you'll move, and in contracts you need to cover some of that for service credits too, so on and so forth. Contracts also have to be strong with your customer, where for the first service level breach you won't get penalized, so there'll be opportunities to recover, rectify, and then you move on from that. Worst case, if you have to, there's insurance as well, freight forwarders covers to cover some of the risks. Basically, professional negligence covers. So all our clusters have different types of insurance to cover for some of these aspects, right? But again, on the regulatory side, we have a strong legal and regulatory team that monitors these regulations to make sure we have something called a compliance index, which gives scores of compliance. So overall, it's highly monitored. It's a highly regulated industry, especially in the marine side. Like you say, if there are ESG or environmental issues, there are licenses that we need to take, as well as mitigation aspects, and of course finally there's the good lawyers who will defend you as well. So
okay, understood, Mr. Virendra. Thank you for that. Moving on to the next aspect, where we see one of the biggest costs for Hayward is in terms of the fuel costs. And also with this, we see that they face a big risk with the currency fluctuations within the country. So in the case study, they've actually suggested some of the mitigation actions. So from an OPEX point of view, to renegotiate any bulk fuel purchase, and also from a CAPEX point of view, to delay some of the capital expenditure. Could you maybe share with our students some of the real world strategies that have been used in instances like this to tackle this currency related risk, with fuel being a big cost to logistic companies?
Yeah, so it's kind of, because the 5 clusters are pretty different. Like I said, the international freight, where there's shipping and freight forwarding involved, most of it is price related. So if the big shipping firms raise their prices, obviously, the prices go up with regards to even if fuel to bunker. So for vessels, bunker is the fuel. If bunker prices go up, obviously freight rates also go up. So that way, freight rates mitigate the whole impact when it comes to shipping and freight forwarding. Then if you look at integrated logistics, if you look at road transportation and so on and so forth, again, the cost side goes up, and there are times that you have clauses in contracts and so on and so forth, that the prices also can be looked at with customers, right?
Understood.
On top of it, obviously, we have hundreds, let's say in our Advantage 3PL, we have hundreds of trucks and 20 footers and 40 footers going up and down. So then we have technology in there to help, like for route, it's called route optimization, where you obviously map your routes and make sure you don't go more kilometers than you really need to, right? So the whole technology is used for route optimization. Then we have transport management systems, fleet management systems, technologies to make sure that you optimize the number of miles you travel and the number of vehicles you have. You have something called reverse logistics. If you send a truck full, you try and bring a truck full back. Right? So reverse logistics has to be looked at. Utilization has to be looked at. So that's more or less the transportation aspect of it. But where we are exposed to is where we are a bunker supplier. Like we supply fuel to vessels. So then we buy at one price and we'll have to sell at another price. So we look at different mitigation tactics there, where minimum order quantities only need to be bought to reduce your parcel sizes. On top of it, worst case, we'll look at hedging. But because we are large, we'll have multiple ways of mitigating it.
Okay, understood.
On the exchange, you asked me on the exchange. That was only on fuel I spoke about, right? So exchange again, from a import-export point of view, will be exposed, but the idea is, because we are a large company, we try and have a balanced portfolio of, so like I said, we are in 8 countries, right? So we are not then exposed to just one currency.
8 different currencies.
8 different currencies. So there also your portfolio is kind of balanced. On top of it, we are in 5 clusters, right? So in that in itself, you'll have different aspects of the currency aspect of it also. And then wherever required, where we can't, diversify that risk away, we will hedge. We'll go into hedging tools in and out. So, but we'll try our best to look at the currency we even if we are not in those 8 currencies, even in Sri Lanka, for example, bunker fuel is predominantly it's kind of in foreign currency only we sell. So you try and match your revenue and cost in the same currency. So that's transaction risk actually in exchange rate. But of course, if you report in one currency, which is not a realized exchange loss, but there is translation loss also. So those are aspects, it's purely, I think, on book. It might show as a exchange risk, but those are more translation risks.
Just to expand on this topic in terms of the exchange rate risk, so the case study, we see that the management suggests an internal treasury team.
Yeah.
With your expertise being the group financial director, would you share with our students some of the steps that they need to make sure that this team's effectiveness is at 100% and they achieve that necessary outcome that they're looking for?
Yeah. So again, having a centralized treasury team, you need to look at the economies of scale. So being a large group, there is an economy of scale to be achieved by having a centralized treasury team. Again, in treasury, you have to look at all aspects, the OPEX to CAPEX to working capital to, your capital structure as well, equity to debt. Even in debt, you need to look at long-term, short-term, variable versus fixed, and then the currency aspect of it. So you try and match wherever you're getting your revenue in that currency, you try and match your loans also in that currency. So kind of to have a natural hedge aspect there. But overall, to handle a large team like that for treasury, you will have to have even technology. There are treasury management systems out there. We use one as well. It has to be optimized much more. I think we have to use it much more. But it is that governance that even though we have 50 odd companies, 8 countries, finance is looked at as one, like from a centralized point of view. Policies are made at the center, at head holding company level. The business units are business partners, and we have a shared services which we call the finance center of excellence as well. So those 3 units only function to achieve, so it's, you have to coordinate and do and bring that coherence and standardization. If not, it's very hard to execute. If not, you'll have 59 companies doing their own thing.
Yes, so technology is something that we need to bring in here to ensure that the effectiveness of the Treasury team is also achieved.
Absolutely.
And you spoke about governance. What sort of governing protocols or governance mechanisms should be brought in for the internal Treasury team?
So there, from a large group like Haley's, obviously Haley's also has a Treasury team. Then even at our cluster level, we have a Treasury team. So policies have to be set on Treasury, and like I said, if we go to when I say debt, we have to then coordinate and go, because we have scale. You can negotiate better, right? So that governance is there at each holding company level. That governance has to be there. That even if we want to fund a big project, at all levels, the teams have to get involved to first do the feasibilities and then figure out the funding strategies, and then thereafter the cash flow planning to make sure your working capital, all of that is in check. So there are a lot. The whole board papers have to be there to get approvals finally.
Understood.
When all of these things are there, only you get the approval to do it.
Okay.
And then you review against those approved board papers, feasibilities, the performance. That's the governance has to be there.
Okay, so a stringent governance
Has to be there.
process is a must to ensure that this is executed to achieve the desirable outcome.
Outcomes.
Okay, thanks a lot, Mr. Virendra. Another key strategic initiative that is discussed in the case study is an acquisition of an e-commerce logistic partner. So, looking this from a Haley's advantage point of view, can you share with us students what sort of the strategic and the financial perspective of this acquisition? Is it the right way to look at for a company at the scale of Hayworth operating in different segments? Is e-commerce the right choice as a strategic partnership? Any comments on that?
Yeah, so e-commerce is interesting because in here for Hayworth or even for us, e-commerce kind of sits into the integrated logistics cluster.
Okay.
All right. So if you look at e-commerce, there is the marketplace like Daraz and the Wows of the past and so on, Kapruka and all of those guys it's the marketplace where it's kind of the retail face of the selling. So, but everything else is logistics if you look at it.
Yes.
Everything else is logistics. The fulfillment aspect is third-party logistics, but in small parcels. The 3PL is more, pallet in, pallet out type of scenario in cubic meters. But here these are small parcels going. So it's predominantly third-party logistics, but small parcels. So it's called fulfillment in the e-commerce space. So then the rest is last mile. Now, earlier we'll have truckloads going between distribution centers and warehouses, but here it is from fulfillment center. Maybe a bike or a small truck would take it to the end consumer, right? So then it's called the last mile. So, or if you're importing and exporting stuff or express, then you call it cross border. So if you're bringing something from another country, then the cross border aspect comes in. So these 4 or 5 things only call it e-commerce. Okay. Now here again it depends on what they want. Is it now they are a listed company already, so an acquisition obviously has to enhance their shareholder value, improve its share prices, as well as if they want to get dividends, then the profitability of this company has to look. So again, from a Sri Lankan point of view, if it is, you have to see, is it its competitive landscape, how good are they? You have to extremely stringently do the feasibilities, financial, due diligences, legal due diligences, tax due diligences, IT, so on and so forth, to make sure what looks good is actually good.
Yeah.
If it is actually good, then you have to obviously put the share price and share purchase agreements in place with whoever who's buying. So again, you need to figure out, are you buying it 100% or just a 51%? Because if it's 51, you can consolidate because they're already listed, they can do that. But if you're going to buy 100%, again, is it on a multiple basis? Is it discounted cash flow? Again, it depends on the price you're going to buy, right? So once you buy it, then the rest comes in place of how you're going to integrate it, because the whole idea of acquiring is to integrate it, and synergy has to be created, right? It can't be just 1 and 1 equals 2, it should equal 3. For that, once you put it together, the value is much better than the sum of the parts. So that's the whole idea of in an acquisition. So all of these things have to be looked at before you jump in. So the objective is the main thing, because organically you can grow, organically you can start e-commerce, but then you need to see, okay, if you assume it's going to be faster getting into it through the inorganic mean of an acquisition, then it has to be planned really well.
Understood, with all that due diligence that needs to be in place. Okay, thanks a lot, Mr. Virendra. Another key aspect in terms of the case study we see is the talk of the digital economy. And even from a Sri Lankan point of view, we see a lot of focus, even from the government, onto the digital economy aspect. Can you elaborate how a logistic company at this scale that have been spoken about in the case study, how should they really approach this kind of an opportunity? And what are the type of risks that they will come across, and what sort of mitigation actions should they put in place to tackle them?
So it's kind of interesting. I mean, it's technology can be a bit of a buzz as well. So you need to, go through the noise and really see what is there. So find in everything the return on investment has to be looked at, right? So technology, so you shouldn't just adapt or adopt something purely for the sake of saying I'm into AI or I'm into so on. And in the past, a few years back, it was about blockchain and so on and so forth. Now it's all about AI. They'll start generative, then they'll talk agentic. You get lost in the noise. So first is strategic plan. What's your strategic plan? What do you want to get to in 5 years down the line? Then break it down. So your strategic plan then has to be looked at and then the digital and infrastructure plan has to be mapped against your strategic plan. So for us, for every cluster, we'll have a digital roadmap for each cluster, right? So if you look at integrated logistics, you're talking about warehousing. So we'll have a warehouse management system. So we have a company focused only on software development for our class, our group. We call it MIT Global Solutions. We have software developers to infrastructure guys to so on. So we've in the past developed everything in-house. We have our own warehouse management system, our own freight forwarding system, shipping system, project management system, so on and so forth, right? So that's integrated logistics. If you look at the international freight, our own freight forwarding system, shipping system. If you look at marine side, we have our own, crew management systems in place, as well as the main area in marine might be all our assets, right? So main thing is asset utilization to proactive maintenance to asset optimization. So that focus of technology is mainly that for assets. Same with project logistics, because we have cranes to multi-axle trailers to so on and so forth. It's about asset utilization and maintenance. On top of all that, project management tools are really used. That's just the front end systems. Then the back end, we'll have our usual ERPs like the SAPs running across. The business intelligence tools are then on top of it, the wrapper of giving business intelligence. So the Power BIs and ClickViews and all are used. Wherever possible, we are having use cases with AI to see whether, what's the, study it in depth and then see. I mean, we'll obviously everyone uses ChatGPT now for everything. But in our own databases, we have Microsoft running across. So Copilot is there to kind of make our life easier. That's more an internal AI application point of view. So the usual in finance, you'll have RPA running across, automating, routine transactional stuff. So across technology, the main thing is return on investment and the strategic plan, your digital roadmap, infrastructure plan, everything has to contribute towards this, and whatever we invest, there has to be a return. You should not do anything, even technology, for the sake of it.
Okay, thanks a lot, Mr. Virendra. I think breaking down that in a nutshell will help our students to understand that technology is something that needs to be utilized on, but it has to collaborate with our strategic plan for the short term or even the long term. Thank you. So, Mr. Virendra, a key strategy that is being introduced to us in the case study is this Hayworth logistic free zone. From your point of view, how strategically important are free zones for logistic companies in the long term as a growth strategy?
So, in Sri Lanka, it was created because that hub that came out 7-8 years back. So few companies, including us, also invested in a state-of-the-art. It's kind of a third-party logistics facility, but in a free zone in Katunayaka, right? So we also we call it the Haley free zone. Now there again, it was more to capitalize on the hub act. So not many can capitalize on it, but a few could. So we were one of the few that capitalized on it. But it all depends on the government regulation. So that regulation says there you can do, third-party logistics purely though from a entrepot and that type of business where a customer could bring goods in, free, customs don't get involved. It comes straight away to the free zone. You can store there obviously for limited periods of time. You can even do minor value additions and then you ship out. So nothing can come into the country. That's the whole idea of a free zone facility. So nothing can come into the country. Initially there was a small percentage they allowed, but of reason they stopped that also. So it's purely for the location for customers, regional companies to make use of the facility devoid of duties, right? But as a company, we got obviously tax benefits and so on as well for a limited period of time. So if all those factors are fulfilled, then yes, go ahead and do a free zone. But you're competing with global players like Singapore, Jebel Ali. There are free zones there. Now Malaysia is starting one in JB. Dubai talks about a lot of free zones. So there you're not in Sri Lanka, but you're competing with global free zone, global players. Then you obviously, because as a regional player, price, cost, those matter. So you need to look at those costs, and finally these are value. What value are you giving your customers through this free zone vis-a-vis these competitors is what you need to see. And for all this, the government has to maintain their regulations and not change free zones. Now, of course, if capacity is building in ports, logically, why don't you create free zones within the ports? Whereas our free zone is near the airport in Katunayaka, right? So that's where. So if the government regulations don't change, so you need to make sure that those things are there.
Understood. Thanks a lot, Mr. Virendra. Coming to the sort of the final aspect of our discussion, we see that ESG is kind of like a hot topic. For the logistic industry, how has this sustainability related regulations, what sort of customer requirements have come into play, and how can a logistic company tackle them and address this kind of asks in terms of ESG?
So there are two, I think it depends on the clusters you're in, like integrated logistics, marine. Those are areas where ESG, obviously becomes more stringent. Now for us, we'll have multinational customers and clients. So then, they put some of those, rules or standards in place to be compliant with all these standards. On top of it, in marine, it's all about IMO regulations and green fuels and so on and so forth. They've set a lot of timelines and milestones there. So keeping all this in mind, we need to be part of it. Obviously it is an issue. Global warming is an issue, which obviously through rules they are trying to curtail the impact of the whole global warming and emissions, carbon emissions. So we have a holistic strategy, a policy which we launched called Helios. Helios is in line with the Haley's life code. So Haley's has put the life code. Then we have one for the advantage cluster called Helios, which is also giving it, depending on our clusters, emissions with targets and so on and so forth to achieve. So we track it, like I said, like everything that we do. We track that roadmap also, the ESG roadmap. We have the steer codes in place to make sure, because it's not only environment, there's social governance, all of those aspects are looked at, and to achieve that. So pure, if you look at our warehouses, everything would be running on solar power. All our vessels also, we are dabbling in alternate fuels. We'll look at some of our fleet being converted to electric. On top of it, we do a lot of projects on more from a social aspect and sustainability point of view. We have a big project on mangrove regeneration with the government also, and universities. We do a lot of that. We've donated research centers using containers and containers. So the lot of that is happening, but not only here. We because we are a regional player, we look at all of that. But it's very important. There is no two words about it. Without the rules, it is an issue that we need to be mindful of.
Okay, so it has actually sort of being like an enabler to achieve maybe that extra competitiveness in terms of the market share.
Okay. We don't look at it from that point of view. It's kind of the need of the hour, so we do it. Because we are, I guess, again, because of our strength, we can do some of these projects and aspects, and in the meantime we might get competitive edge because of that. And on top of it, the whole reporting standards, annual report, so on and so forth. Again, it's an integrated report that we have, which covers all of this as well.
And also, I guess it helps with the upcoming SLFR standard requirements.
So we are compliant with all of that, and with Haley's. Haley's is a listed company, and we voluntarily started reporting on those standards last year itself. So same with us. We also just followed, even though we are not listed, we are a private company. We still have more or less the same or same standards of a listed company.
Okay. Thanks a lot, Mr. Virendra. I believe those insights have been very helpful for us students, especially in terms of adding that extra value to their answers in the exam. As like a final note, do you have any key advice that you can share with our students that will help them in the exam that they are yet to face?
Yeah, I think main thing, hopefully all this was helpful, but I think you should research a lot, because what works in Sri Lanka might not work in other parts of the world. So there are uniquenesses even in e-commerce, so on and so forth, where the Sri Lankan e-commerce marketplace is totally different to how India would run or Indonesia would run, because we are in these countries as well. So main thing is to study, if this is purely from a Sri Lankan point of view, study all these companies, and answers are already out there. So main thing is to study hard, then you can achieve.
Definitely, not just to stick to the pre-scene that they've given, but to research and look what's out there, not just the Sri Lankan context, but even other countries.
Absolutely,
logistic companies.
Even in the region, because we are more a regional player. South Asia, Southeast Asia. Southeast Asia is different to South Asia. We've been in India for 20 years in the south doing third-party logistics, so it's different. The south is different to the north. So it's huge.
Yeah, I think that's a perfect note to end the conversation with Mr. Virendra. Thanks again on behalf of our students and Infinity Learning Space for joining with us and sharing your expertise.
Thanks for having me, and welcome.